Good morning, afternoon, or evening, ladies and gentlemen. Allincrypto here, and welcome back, guys, for another daily cryptocurrency market update. And if you are new around here, every single day at 1 p.m. UK time, we're committed to bringing you an update just like this one. So don't forget to hit that subscribe button. We have a lot to talk about. Of course, in yesterday's daily market update, we looked at the non-farm payroll that then was ahead of us and now is behind us. And we are going to be looking at the implications that I think this has had for the market. It's a double-edged sword. So in the environment that we're in, of course, we know that good sort of economic data has contributed to a more aggressive Fed, a more hawkish Fed. However, there is a correlation between economic data being good and the stock market, which we're going to look at in the form of unemployment. Also, we'll take a look at Bitcoin, the stock market, and a number of other markets that seem to be sort of turning around, like the Dixie, the dollar, of course, which is something that we're very pegged to as a space. Risk is very pegged to the dollar. Typically, when the dollar is strong, risk is not, because there's a reason people are going into the dollar and the dollar is strong itself. And then we'll look at a number of other things. But I really want to start the video off, actually, with a clip of Joe Rogan, none other than Joe Rogan, the largest podcaster in the world, actually talking and championing and advocating for Bitcoin. So let's get into that clip, guys, and then we're going to go over the things just discussed.
I mean, the real fascinating crypto is Bitcoin. To me, I mean, that's the one that I think has the most likely possibility of becoming a universal viable currency. And it's limited in the amount that there can be. It's, people mine it with their own computer. It's like, that to me is very fascinating. And I love the fact that it's been implemented. I mean,
wow, pretty amazing to hear the biggest podcaster that there is sort of hailing and praising Bitcoin and saying that it stands a chance of being a kind of global currency. And Larry Fink actually uttered a similar sentiment in regards to why he likes Bitcoin. We're going to see more and more of this. Bitcoin is ultimately offering an alternative to the monetary system that we have, and it's done an exceptional job at it. And actually, if you look at it against the monetary system or against other assets, it's performed very, very well. Let's get into the events of yesterday. And of course, I'm talking about the non-farm payroll. Now, the non-farm payroll expectations were 171,000. It came out at a whopping 336,000. So a massive beat. This has been a common theme that we've seen during this kind of cycle of economic data in regards to it being a lot better than expected. Now, this is a double-edged sword, of course, in the current environment that we're in. Typically, the Fed has used the employment data to back its hawkish rhetoric. They still see a strong labor market, and thus they can have that room to move forwards. However, it's also, so you could say that's a negative for the market, and that's one edge of the sword. It's also perhaps a positive for the markets, because we know that historically, the correlation between employment is that when employment is strong, the economy is doing well, and vice versa. And actually, before you here, you have a monthly chart of the unemployment levels in the United States. This is the Bureau of Labor Statistics. And of course, in red, the nice S&P red, you have the S&P. And the correlation here is when you have unemployment at a high, the stock market is typically at a low. Unemployment's in black. And then when you have unemployment at a low, the stock market's typically at a high. And we are still at that low point. And actually, I believe that this is why, despite one edge of the sword being the fact that the Fed have more room to tighten, I personally think right now they're watching the bond market and are very, going to be trading carefully as a result of that. But even though this gives the Fed perhaps more room to tighten, you can see actually in regards to the Fed watch tool, and of course you've got a lot of data to come out, like CPIs, I think next week, before we can get a little bit closer to the date and a little bit more certain. But right now, as of the time of recording, it's 72.9% that they won't hike, and a 27% that they will. And of course, we are watching the 2-year yield for that. Yields continue to spike. The bond market continues to nosedive. And we've already seen both the United States government and the UK government step in regards to the bond market, certainly the treasury market in the forms of the gilts, and of course with Silicon Valley Bank. So I think the Fed's going to have to walk and tread a little bit more carefully. This economic data is also, in regards to the strong beat, backs our entire theory and why we fundamentally right now are disagreeing with the bears. We ultimately think that The bears are right in regards to a crash that's going to happen and come, and the yield curve is predicting it. We know this. But if you look at every time they've upped rates, it's not until after they've upped rates. And usually there's a period before, a substantial period before the crash actually occurs. And if you look at kind of a study on the transmission lag of monetary policy, you can see it very much lines up with our thinking. And you can just go and get the S&P chart and overlay the Fed funds rate, which we'll do actually very quickly for you guys just to really show it. Effective Fed funds rate. Let's get off the drawers because you don't need them. And let's put this on log. You can see the stock market actually closes higher from when they start upping rates than to when they end them. And the crash usually doesn't occur until after the rate hike, and the market's typically do well in it. But we've spoken about all that in quite a bit of detail. Let's look at actually how the markets reacted. So there could be a turning about to take place. Just to cover Bitcoin quickly, because this is a crypto channel, we are still very much caught in a range. And let's get off the 3 daily chart to actually look at the range that we're in. You can see that this is the kind of range that you're finding yourself in, right? And until we break to either the up or the downside, there is still the possibility of this head and shoulders, which is going to tie in with an ABC correction. That's going to take you down here in regards to where the target is. That's the downside short-term scenario. We still think that sets up for broader upside. And actually, we did a video with More Crypto Online this morning on Elliott Wave Theory. Very interesting to see 2 different technical styles that both have similar outcomes in regards to projections of the market. So we're ultimately just waiting for a break of this into further upside, and then you're going to get and progress towards 40K, or you're looking for a deeper correction that eventually then turns around. That's our forecast on the markets. And we've also looked at the fact that you kind of had a concession of head and shoulders. This is our first head and shoulders that met target. Just do this very quickly, guys, because we're going to be looking at the stock market and a number of other things. And then we had one here. All meeting targets. Ultimately, we're still not 100% sure on Bitcoin in the short term until it does either one or the other. However, we are mid to long-term bulls based on everything that we've looked at and we continue to look at. And actually, the economic data is kind of, I think, going in our favor. Of course, Bitcoin did quite well yesterday. The stock market did pretty damn well. And actually, if we take a more zoomed out look at things, if you look at where the stock market is, it's bouncing at the right place. And look at these wicks coming in. This is happening. So you could be on the turn for the stock market. If you look at the likes of, again, the NASDAQ, this is a perfect area to find support. The question is, does it hold and do we get that turn? Bit of confluence with the dollar and actually how it looks on the weekly. You can see this is a real hammering wick to the downside. So this could be a spinning top that's going to lead to further downside continuation for the dollar. Hopefully, you've got gold that popped its head up. Generally, risk could be about to turn. We've looked at a lot of other stocks like Microsoft, all turning at the right place. Tesla, which pre-market was down pretty badly. And of course, Coinbase, which is one of our favorite stocks, all showing potentially the signs of turning. Now, that's going to filter through to Bitcoin. Bitcoin, during a time period where the dollar's been very strong, has actually held up better than many of the others. So if we get that macro tide turn that we've been swimming against, sometimes getting too tired and spilling like we saw in August 17th this year, then if we get that turn, then actually Bitcoin's likely done with its correction. But we'll see what the markets bring in the sort of week ahead. So there's a lot to watch. You're still in a range as far as I'm concerned for Bitcoin. We are seeing early signs that potentially there's a kind of reversion of this range. A reversion of the kind of macro headwinds that we've been in. However, saying that, the bond market continues to get absolutely killed, which is typically being correlated with risk. Bonds have gone up for 40 years on the back end of QE. Risks and a similar thing. The real estate market, a little bit more firm than the bond market. A lot of these are at kind of what you'd look for as support. So we'll see what the week ahead actually brings. And actually, if you look at Bitcoin against the S&P, it's doing well and starting to really show strength, and against gold. And of course, we did mention earlier this week that we were interested in Grayscale's GBTC, which is still at a 19% discount, and that window is closing, and this is looking to see that upside. And typically, of course, GBTC is almost like an institutional representation of Bitcoin. So we'll see how it all correlates together. Anyway, I've rambled on for long enough. Great news that Joe Rogan is actually talking and highlighting Bitcoin, the largest podcaster in the world. Also, macroeconomic data potentially supporting our overall thesis on the markets. And we could be in for a very interesting week starting Monday, as a lot of markets look like they are turning around, and that macro headwind that we've been against may be easing and actually become a current that we can swim with. That's all I've got for you guys. Have a smashing Saturday, and I'll see you all in the next one.